Welcome, I'm David Geiger. China made its biggest purchase of U.S. corn in history this week. This is the second massive purchase that China has made for corn in less than a week. Even as tensions rise between the U.S. and China, the purchase could be an attempt to meet commitments set up by the Phase 1 trade agreement. The USDA says private exporters report China bought 1.76 million tons of corn, passing a previous record of 1.45 million tons back in 1994. That beats a record sale of 1.3 million tons just this last week as well. China has agreed to buy billions of dollars of U.S. ag products over the next 2 years for its side of the trade agreement. China is also increasing testing times at some of its ports. Meat, seafood, and some other products for coronavirus have tripled custom clearance times. It normally takes 3 days to clear products through customs, but according to Bloomberg, that's now up to 10 days, as the country started testing cold food shipments last month to protect public health. The testing is adding to congestion at some of its biggest ports, and as it's boosting its meat imports by nearly 75% in the last year, in a bid to offset domestic shortages because of African swine fever. Although China does need more meat, the testing may cause exporters to slow sales to the country. Increased sales do not appear to be influencing the market. Our analyst Jeff Caprellian has the details.
We are just not at the right time of year to really expect any rallies. We were forecasting 360 by July 15th early on in the year, and we've achieved that. And now we don't really see any reason, based on seasonality, based on the Commitments of Traders report, or based on the fundamentals, to be significantly bullish moving forward. The one thing that a lot of people are talking about, and certainly merits discussion, is the fact that we've had the Chinese come in and buy huge amounts of corn over the last 2 weeks. Now, look at how the market reacted to that, right? On both days where that occurred, the market closed lower. So it seems to be shrugging off that news. The cattle market is having its first really strong day in about a week and a half here. Forecast higher prices later on. But right now, we just need to get above this range before things really start to accelerate. Because once we bust it to the upside, we'll see fund buying. We'll see all sorts of traders getting into it. And that should excite the market again. The hog market is still giving us nothing exciting to work with, unfortunately. It's another tight range day down at these low prices. The commercials seem to be interested in the hog market. So just like with cattle, we think that we're going to get some nice prices at the other side of this, but we just need a catalyst to get us there.
Tractor and self-propelled combine sales were higher in the U.S. and Canada in the last month. According to the latest data from the Association of Equipment Manufacturers, this is the first time this year where sales numbers rose. Total U.S. farm tractor sales was up 32% in June. Only four-wheel drive tractor sales declined. Total year-to-date farm tractor sales are up 10% in 2020. AEM says with the economy open, they're not surprised about pent-up demand, but they are cautiously optimistic as COVID-19 could have another negative impact moving forward. And that's all I have for the Agribiz Report today. Thanks for joining me. I'll see you again next time.